The most successful investors in digital assets right now, they're not the ones with the best analysis. They were the ones that were there before the analysis even existed. And that's the truth about a lot of markets that don't have a name yet. By the time there's a set playbook, a lot of the margins have already collapsed. So let's walk through 3 markets that are in development on Steam right now, one that's about to launch, one that doesn't exist yet, and one that we all know and love. But before any of that starts to make sense to you, you need to understand digital scarcity and why it works fundamentally differently than what you've been told. Over the last few months, we've seen offers on fucking Pokemon cards that make blue gems in CS2 look like a failed NFT project. And that's not hyperbole. Logan Paul, the YouTuber, has a one-of-one Pokemon card that has seen bids upwards of $6 million US. But instead of being annoyed and pissed off that this piece of cardboard is worth $6 million, let's instead ask ourselves why. Why is this card valuable? Why this one as opposed to the other ones that you can get in any pack from a store anytime you want? The answer is not nostalgia, it's not scarcity alone, and it definitely isn't some mythical property of just Pokemon cards. The answer is liquidity and the digital infrastructure that houses liquidity. Because me and you, we're pioneers of this infrastructure. It's still in its infancy, and it's going to be built in a lot of places that people simply haven't looked yet. Let's take our favorite, CS2 skins, and let's consider what happened to make CS2 skins a viable asset class. Now, CS2 skins have an analog in real life, literally and figuratively, and that would be baseball cards. But in 1995, if you wanted to liquidate 5,000 baseball cards from your collection, you were looking at months, if not years, of dedicated work. Physical, paid advertising, meetings one-on-one with collectors, making sure your assets are authenticated, and balancing all of that with the geographic limitations of selling a physical asset. Fast forward to now, in 2026. A digital asset, you can move in days, if not hours, if not minutes. Buy orders are set, they're right there ready to go. Because now we have an infrastructure, KYC built in, you know who's buying, payment processing, trust networks, reputation systems. So not only do digital assets reduce the friction involved in a transaction, but in a lot of cases, they actually eliminate complete whole categories. I don't have to ship nothing to you, I don't have to authenticate shit, no disputes over its physical condition, and you have a global market as opposed to your regional market that only existed to you with a physical asset. And that's a variable that most people miss. The infrastructure has to exist, and only then will the demand come in and the scaling will manifest. You simply cannot have liquidity with a foundation that's inherently illiquid. Which brings us to where that infrastructure is being built right now, and why most people are thinking in the wrong way. Valve. We know them and we love them, but they are not simply a gaming company with a marketplace anymore. They're a full-on financial mecca that happens to make games from time to time. Consider this for 5 seconds. The country of Greece, their new financial minister, used to run Valve's in-game economies. I don't know about you, but if you've paid attention to Greece's economy in the last, 50 years, you'd understand that this hire is not because they're just an economically booming country and hiring whoever the fuck they want. No, they trust this guy. They trust this guy a lot, and that should speak to Valve's prowess. Now let's think about the timing of everything going on right now. Valve is preparing to release the Steam Machine in what is one of the most turbulent times in the gaming industry, maybe ever. And that is, of course, in terms of hardware. Now, the demand for AI computing power has pushed RAM and GPU costs into a territory in which PCs from 2013, entire setups, cost less than 1 part in 2026. Older GPUs are being brought back by companies specifically for retail so that they have a purchasing option that isn't competitive with mining and AI computing farms. So now, the Steam Machine is no longer just a product launch. It's pretty much your only option and your gateway into PC gaming. New users enter through the hardware, they become integrated and familiar with the Steam ecosystem, and thus inherit access to every marketplace Steam operates. And what happens if Valve builds and fosters new economies other than Counter-Strike within the Steam marketplace? Now, everything I'm about to tell you about emerging markets doesn't matter unless you can move assets when you want to. Liquidity is not a theory, it's the difference between you making a successful, profitable trade and you never being able to get rid of your shit and losing a bunch of money. Which is why today I've partnered with WOWSkins as today's sponsor. They are our secondary avenue into CS2 trading, and that's because they give a very, very competitive edge when it comes to selling skins. And now these are margins that compete with every CS2 marketplace in NA and EU. If you're sitting on a large inventory and you need to exit, or you're looking to enter positions, scan the QR code on the screen. The current market dynamics reward people that move fast. And with my partners, it'll be impossible to slow you down. Back to the video. Now, let's talk about a market that's in development right now. Now, you might remember Gary's Mod. If you were a browser on YouTube between 2012 to 2015, you literally couldn't escape it. It was Roblox before Roblox, essentially. Sandbox gameplay, user-created content, and the audience was a generation of kids who didn't even have Steam, right? We all had Xboxes, but we still tuned in to people playing Gary's Mod. And now, the people who grew up watching those games are on Steam, and Gary is back. S&box, or Sandbox, hilarious, I know, launches as a spiritual successor to Gary's Mod, and it's supposed to come in Q1 2026, so a few weeks from now. The modern iteration of Gary's Mod. Same creative sandbox philosophy, but built with and built for current infrastructure. They launched with revenue sharing pools for creators, which thus inhibits a very large game library that should be poised to compete with the titans of the industry right now, Roblox and Fortnite. The bonus is an in-game economy that's integrated with the Steam community market. The one statistic that really sold me was the amount of people aged 18 to 35 that play either Roblox or Fortnite. It makes up a solid amount of both of those player bases. Right? I would not have guessed that in a million years. So you basically take the same game, more or less, the nostalgia factor of the game you used to watch as a kid, plus the bonus of an in-game economy. Sandbox definitely has legs to run. And what makes it interesting is, unlike Counter-Strike, where drops are determined and cases are set and collections last a while, Sandbox is implementing deliberate discontinuation. Their in-game store, items enter it and are promptly discontinued, which you can find on the market underneath their product description. The game has not even been released yet, and they're already implementing artificial scarcity. So I've been looking at the current item catalog, and it's pretty bare bones, as you would expect for a game that's not even released yet. Well, there are some ones that do interest me. I would stick away from the seasonal items. Their Christmas and Easter items, they may look alright, but there's always going to be a new Christmas item every year, and the demand only comes once a year, and it's kind of priced in already. Right? You want to look for items with like aesthetic longevity, timeless shit, and they're not going to have like analogous replacements. Some ones that I saw that look cool, the conspiracy mask, the one that looks like a plague doctor head, banana shoes, stupid bullshit. But stupid bullshit that'll be worth fucking $800 in 3 years. Right? These things aren't seasonal. They're not tied to events that happen every year. So if the game achieves even modest success, which for them would be stealing, 3 or 4% of the market share from Roblox and Fortnite, these will become the analog of like discontinued collection skins. Cobble, Gods and Monsters, Norse, and even worse, because there's no trade-ups like Counter-Strike. Permanent scarcity, no mechanism to replenish or replace these items if accounts get banned or become dormant. So I'm gonna throw $100 in it. If the game underperforms, cool, you spend $100. It's like you bought a game that sucked ass. If it performs anywhere near Counter-Strike's trajectory, or Gary's Mod's trajectory, or a fraction of Gary's Mod's trajectory, those early items are going to have an upside that scales with the player base, which is nearly infinite in a game that offers infinite fucking games. Now, that one's more grounded in reality. Sandbox is a reality that's going to happen in the next 2 or 3 months. This one is more speculative, but also not really, because we can realistically expect this to happen, and that is with Valve's newest IP, Deadlock. Now, Deadlock is an interesting game. I like to think of it as a hybrid of all 3 of Valve's previous games, right? You have to buy everything like Dota, you have to have good aim like Counter-Strike, and the aesthetic and the class styles kind of remind me of TF2. Now, I hate Dota, League of Legends, but I did very much enjoy Deadlock. The aesthetic was cool. It wasn't like weird wizard nerd shit. It was like an interesting aesthetic. A lot of it, everything about it drew me in. Now, the game is still in closed development. It technically hasn't even been released yet. But Valve's entire business model is built off of these in-game economies, so it's pretty safe to assume that cosmetics will come in due time. And here's another insight that may be interesting in the future. Counter-Strike operates under a unique level of regulatory and media scrutiny that other titles that even Valve makes themselves simply aren't going to face. Deadlock isn't going to have the spotlight Counter-Strike has, and as long as they don't add cases, if they even add a system such as sandboxes where items are discontinued after a set amount of time, those first waves of cosmetics before the game gets popular, because I do think that game will get pretty popular, you're going to see some opportunities that simply aren't going to be there once the game matures. Now, before anyone freaks out, gets their panties in a bunch, let me be clear about how I handle myself in these positions. Any of these fun assets, even though I genuinely believe a lot of these markets are here to stay, especially the established ones like the Pokemon cards and the CS2 skins, your best bet is to not put more than you're willing to lose. Obviously, I would stick around 5% of your net worth. These are fun markets, they're interesting markets, they're way more happening than a stock or a crypto market, and for the most part, they do have genuine upside, especially if you're early. But they're also speculative in nature and speculative in ways that traditional markets aren't. Price action in these markets are happening because of demand shifts and artificial scarcity, which are at the whim of the company who's making it. Right? These mechanisms don't exist in equities, bonds, stocks, whatever. So it creates the opportunity, but it also creates the risk. Now, for the young and non-risk averse people who are savvy, there is a case to be made for upping that allocation a little bit, maybe towards 8 or 9%. The fundamentals still apply. Dollar cost averaging is always going to be better than putting all your money in at once. Time in the market is always going to beat timing in the market. And diversification is the only free lunch. Make sure to spread that money wide. That way, if one thing crashes, you have everything else ready to uplift you back up to where you were before. These markets reward early positioning, and it's early positioning that you've never had the opportunity to experience. You wanted to be early in the stock market? Well, you should have been born in the 1910s. The upside is there, and it doesn't require that much starting capital, which is why I like the idea of putting money into it. $100 in Counter-Strike in 2013 could realistically be 30 to 40 grand, depending on what you bought. A game costs $100. It's not that big of an investment. In fact, it's barely an investment. It's dinner. If you're watching this, I imagine you've missed something in your life. You've probably missed Bitcoin in 2012. And while you were moping around about Bitcoin, you missed Ethereum in 2017. And when you were moping around about that, you missed Solana in 2020. You may think right now that all the opportunities that would have made you rich are in the past, gone, can't happen again. But the pattern is opportunities are always ripe, right in front of your face. You just have to pay attention. S&box launches in a few weeks according to their plans. Deadlock should be out in the next 365 days, maybe 2027. And the Steam machine will bring in hundreds of thousands of users into the Steam ecosystem forever. They're not going back. The question is not whether these markets will develop or be trustworthy. The question is, will you recognize them before the infrastructure, before the regulation, before the companies come in that make it obvious that it's trustworthy? There is something sitting in front of you right now that will seem very, very obvious in retrospect. The only way to find out what it is to pay attention. Cheers.